if you don't have, if you're middle class or you're working class, especially in the rest of the world, you can't really buy stocks and land and commercial real estate. So there, your best bet is to convert the weaker currency to the stronger one, but that's a near-term stop the bleeding. And the long-term solution is convert whatever assets you have into the strongest asset, which would be Bitcoin. I think that the next decade's going to be all about digital transformation of property. I think the last decade, a lot of people's lives were improved by digital transformation of books and music and education and communication, just like we're speaking to each other now. Things like Apple and Google and Facebook and Amazon and YouTube, they've made the world a better place and they've driven down the cost. I think that Bitcoin is about the digital transformation of property. And what we're doing is instead of requiring people to buy gold or buy land or buy collectibles or keep their property or their money in currency or in a bank, or to take risks on companies or equity or stock or bonds, now you could just put your property into a Bitcoin and put the Bitcoin on your mobile device. And I think the reason that represents hope to the world is 8 billion people are going to be able to afford a mobile device, and 8 billion people can have property on the mobile device. Bitcoin is like a bank in cyberspace run by incorruptible software, and it offers everybody in the world a simple, secure, affordable savings account where they can deposit their money and keep it. I think that you have a set of nations that are on the dollar and the euro right now, and their currencies are losing about 20% of their value a year. They used to be losing 7%, and now they're losing 15 to 20%. So they've got a problem, but it's not an urgent problem. And then there's another set of countries where the currencies are losing value faster, 40% to 80 or 90%. And Venezuela has that challenge, and Argentina has that challenge, and certain other nations. So if the local currency is slipping faster than the rate of devaluation of the dollar, then I think that creates an urgent event, and it becomes pretty clear that everybody in those countries, they would like to change their currency from the weaker currency to the stronger one. So if they could swap the weaker currency to the US dollar, they would. But that only works if you want to save money for about 1 to 3 years. If your time frame is a decade, you can't hold money in the US dollar either. You need to flip it to an asset which is stronger than the dollar, and that would be Bitcoin. So I think that in the US, people are going to have a problem, but it's years out. And so long-term thinkers, look to Bitcoin. But they also have other choices, right? For property, if you're in countries like the U.S., you could buy stocks. A lot of times they could buy equity indexes, the S&P index, or they could buy land or buildings, and then they could buy Bitcoin. But if you don't have, if you're middle class or you're working class, especially in the rest of the world, you can't really buy stocks and land and commercial real estate. So there, your best bet is to convert the weaker currency to the stronger one, but that's a near-term stop the bleeding. And the long-term solution is convert whatever assets you have into the strongest asset, which would be Bitcoin. I see Bitcoin as store of value, and the US dollar is a medium of exchange. And when the medium of exchange loses value more than 1% a month, it starts to become a big concern. And if it's losing value at 1% a week, then the medium of exchange starts to break down, and then you need to find a stronger medium of exchange. Well, our corporate strategy, our treasury strategy, is we calculate the amount of working capital we need for the next year. And we ask the question, in the 99% case, if everything is the worst we could imagine 99% of the time, how much money would we need? And we're about a $500 million a year company, and so we have about $50 million in working capital. So think of that as our checking account or a near-term account. That $50 million we keep in a medium of exchange, the US dollar mostly. So we will hold dollars up to 50 million. And then when we generate cash flows or we have additional money that comes from equity or debt or cash flows, we will put that in our treasury. And our treasury strategy is we use Bitcoin as the treasury asset. So the dollar is inflating, and so it's losing 15 to 25% of its value a year. Bitcoin is going up in value on average every year. So we're basically converting our working capital from the weaker asset to the stronger asset. But the way that we manage the volatility is we make sure that we always have enough dollars to pay all of our bills for the next 12 months based upon whatever volatility. So we wouldn't really ever need to liquidate any Bitcoin unless we had like a 1 in 100 event. And, then we might sell a little bit in order to pay our bills, but that's never happened before. I think that if you think at a decade, if you say a decade from now, I expect the US dollar supply to keep growing by 15% a year. I expect other world currencies to keep growing. And I expect Bitcoin to be capped at 21 million. And I expect lots and lots of businesses to integrate with the Bitcoin protocol and deploy Bitcoin to hundreds of millions or billions of people. If you have that macroeconomic view and you have that technology view and you have a decade time frame, then it's not that risky. It becomes risky if you take a 1 month time frame. If I bought $1 billion of Bitcoin with a big loan and it was mark to market, and every day I had to assess whether I met the conditions of the loan, then I might have volatility in the near time frame that would force liquidate me or create a collateral call. And so short time frame with a short dated debt strategy creates fragility and risk. A long time frame with long dated debt that is not mark to market is just a responsible business strategy. When we borrow money, we borrow some money, but it's 5 to 7 year terms, and it's not collateralized. It's not mark to market against the Bitcoin. So if Bitcoin traded down 80%, our debt would not get called. So the only way we have an issue is if in 10 years Bitcoin went down and not up, then our business strategy would have been a wrong one. But our financing strategy protects us from volatility in the next 5 weeks, 5 months, even 5 years. We can handle the volatility, and that's just part of the way we structured our approach to business. And if you were asking me for any individual, I'd say the same thing. Take the amount of money you need for the next year. If you could keep that in dollars rather than local Venezuelan currency, you'd be better off. Like stable coins, Tether or something.
Yes.
And then if you have money you don't need in the next 12 months, and if you have a 4 to 10 year time frame, then you can start to invest that in something like Bitcoin. And if you don't, if you didn't want to buy Bitcoin, I would say the general idea is you buy a basket of property that isn't a currency derivative. So like you might as well buy a nice house or a car or commodities or land or a trophy asset that will hold its value. It'll still be the same thing in a decade. if you hold a currency or a bond that pays currency and the currency collapses by 90%, then the bond will collapse by 90%. So you don't really want to hold treasury assets in a currency derivative of a currency that's weakening regardless. So that's how I think about it.